Guys, look closely at this chart. This is a mystery. Adobe's revenue is up. Their operating profit is up almost 30%. They are making more cash today than ever before in history. So why is the stock price down nearly 50%? In the old world of finance, this makes zero sense. If a company makes more money, the stock should go up, right? But welcome to the AI economy of 2026. The rules have changed. Today, I'm going to explain exactly why a giant company can report record profits but still see its stock crash, and why this invisible crash might be coming for other stocks in your portfolio too. To understand this, you need to learn one concept: the multiple collapse. Think of it this way: stock prices are not about what a company makes today. They are a bet on what it will make in 10 years. Let's say you own a lemonade stand making $100 a year. In scenario A, investors think you will own the whole city. They are excited. They pay you $3,000 for your stand. That is a multiple of 30x. Now, in scenario B, investors see a robot lemonade machine opening next door. They get scared. Even if you make $110 this year more money, they only pay you $1,500. That is a multiple of 15x. Your profit went up, but the value of your business dropped by half. This is exactly what happened to Adobe. The market has decided that Adobe's future is scary, so they are repricing the stock. But what exactly are they scared of? Let's look at the 3 AI risks that are destroying the narrative. The first risk is simple math. It's called seat shrink. Adobe's business model is selling subscriptions or seats to creative professionals. Before AI, a marketing agency needed 10 junior designers to resize images, remove backgrounds, and edit videos. That's 10 Adobe subscriptions. But with AI tools in 2026, 2 senior designers can do the work of those 10 people. Think about it. If AI makes workers 5 times more productive, do companies buy more software, or do they fire people to save money? If the number of human designers shrinks, Adobe's customer base shrinks. It doesn't matter if the software is amazing if there are fewer humans to buy it. The growth story is dead. This is a deeper concept for us future finance thinkers. For 20 years, the most valuable thing in media was editing. If you had the best tool to cut pixels like Photoshop or cut video like Premiere, you won the market. But generative AI has made editing free and instant. You don't edit an image anymore. You just ask the AI to regenerate it. So where did the value go? It moved to distribution. If TikTok, Meta, or Google can generate an ad for you inside their app and then run it instantly, why do you need Adobe in the middle? Investors are terrified that Adobe is becoming a middleman that is no longer needed. The ad platforms are eating the creative tools. Finally, we have the presumer problem. Look, if you are editing a Marvel movie, you still need Adobe Premiere Pro. I isn't replacing that yet. But what about the other 90% of the market? The small business owner, the YouTuber, the social media manager, they used to buy Adobe. Now, they use Canva. They use CapCut. They use built-in AI tools that are good enough. Adobe is fighting a war on 2 fronts. At the top, professionals need fewer licenses because of efficiency. At the bottom, beginners are choosing cheaper, easier AI tools. This squeezes the company from both sides. So does this mean Adobe goes to zero? No, they are still a massive, profitable company. But the lesson for your portfolio is critical. Before you buy a stock that looks cheap, run it through this AI sanity checklist. Is demand shrinking? Will AI reduce the number of humans needed to use this product? Is the moat gone? Can a cheaper AI tool do 80% of the job for free? Who owns the distribution? Is a bigger platform like Google or Meta taking over the function? If the answer to these is yes, be very careful. A stock can look cheap on paper, low PE. Good dividends, but if the narrative is broken, it is what we call a value trap. If you want to understand more about how AI is changing market valuations, make sure you subscribe to Future Finance Lab. We don't just look at charts. We look at the future. See you in the next one.